I'm Darius McDermott of FundCalibre. Today I'm here with the elite rated manager Ainslie McLennan of the Henderson Property Fund. Ainslie, property's been in the news very much over the last couple of weeks with a number of the bigger property funds having to suspend dealing. Can you explain why that was?
The result of the EU referendum was, I think, a surprise to many. And I think from an investor perspective, even though funds like ours, and certainly our fund has never been suspended before,
No, that's right.
We saw quite a shift in investor sentiment quite quickly. That levelled out actually quite quickly again after the result the following week. But then with the news of one of the funds in the peer group having to suspend, there very quickly again was a feeling that there's less liquidity in the property market, hence people should take their money from wherever they could, and that very quickly had a sort of contagion effect on other funds in the peer group, and hence we got to that point ourselves where we had to suspend.
Yet it's still a good income yielding asset class.
Yeah.
What's likely to happen to the yield on the fund? Is that likely to go up?
I think it probably is likely to go up slightly. I mean, from our own perspective, we're very income focused, and it's a huge trend on the fund to be, you get capital growth periods, you get periods of stagnation on the capital front, but to be very, very steady on the income line. And the focus for us is keeping as low a void rate as possible. So, around 2.8% in the fund, that's extremely low against a benchmark of around 9.5% in the market. And as long a lease length as possible, so sort of trending towards 11 years. So that all wrapped up helps to give steadiness and a robustness to the income stream. We look very carefully at that tenant base, and I think we feel we've got the right profile in terms of tenants that should be able to deliver good, strong, steady rent that of course becomes the dividend you're getting. And we're sitting around 3.2% is the net dividend on the fund, and it's more than that if those are in the PAIF. And that really does help, I think, at a time where we're not seeing very much income anywhere. So despite being suspended, that part of it we can be extremely proactive on and be very forthright about making sure we're delivering strong, steady income.
People will still get their dividend and potentially see the actual yield on that rise.
There is a potential for that, yes, definitely.
Good. And it's at times like this when people always say, is the asset class still viable? Is this still a good part of a portfolio for our investors to think about?
I mean, I think it absolutely is for the income story. We've delivered across a huge timeline now, very steady, strong dividends across the way, and it's hugely disappointing from our own perspective that we're in this situation. But the actual benefit of having commercial property in the UK as a baseline in a portfolio should be helpful where you are wanting the income story. Clearly, in a suspended fund, that's very frustrating for investors. They can't choose when they're coming in and out, but the actual quality of the assets themselves are very good. The sector spread is very good, and the geographies we're in, I think, are strong in terms of the occupational demand for those buildings. And so, the fundamentals of our fund look strong, and the fundamentals in the property market, we had already transitioned back from huge capital growth stories of the previous 2 and 3 years back to a more level basis on capital growth, where it was really driven by asset management as opposed to inward yield shifts. Yeah. And it was about income anyway, so we were kind of back to that position, and I think we've been very clear with everyone that's what funds like ours should be used for. But they're really a long-term story. It's for a long-term investor generally. That's who will kind of take most benefit from it.
Yeah, I mean, I think the income being diversified is good, but also it's a diversifying asset class from traditional equities and bonds, and there's no reason that, you say, long-term asset allocation to property is still, I still think, is a very sensible way to go.
Well, I mean, I completely agree with you. It's not for a large percentage of people's portfolios. It's for something that, is a smaller, useful extra to have in there. But absolutely providing further diversification, and the income story. That income's coming from our perspective, over 500 tenants. 120 to 125 buildings. That gives you lots of diversification in terms of where it's all coming from, and that helps to spread risk as well. Yeah. And that should be useful as an extra in a portfolio.
Ainslie, thank you very much.
Thank you.